What is up, YouTube? It's your boy Sabelo here, and we are back again on another video. And in this video, I am going to be letting in you all on my trendline trading strategy. Before we get into the video, make sure that you check out our channel here. I do videos like this at least 3 times a week. I provide market analysis before the week starts, and I provide a follow-up analysis at the end of the week. So make sure that you check out our channel here, you like and subscribe, and you share with your friends and family. With that being said, let's get into today's video. To make sure that you understand the strategy properly and to show you all that this strategy works across all types of instrument, I'm going to be making a demonstration of this strategy across 3 different instruments. Number one, we are going to be using US 30, which is an index, that is Dow Jones. And then number two, we're going to be using a stock, which is a Tesla stock. Then we're going to be demonstrating with Tesla. And then number three, we're going to be using a currency that we are currently inside a trade on, and that is going to be USD JPY. So those are the 3 instruments that we are going to use to explain the strategy here. Okay, so we're going to start with Dow Jones. But before we get into the actual price action, let me first start by explaining how the strategy works. Okay, so we know that in the forex market we have 2 trends. We have an uptrend and a downtrend. The other movement, that is a consolidation. That is when the market is indecisive or building up before it takes off. Okay, so it is also called a correction phase. It's an impulse and then a correction, and then an impulse, and then that correction. It is that phase when the market is indecisive and is not moving up or moving down. Okay, so when you are drawing a trend line, you need a minimum of 2 touches in order for you to consider it a trend line. So you need a minimum of 2 touches, as you can see here, and then after that you would draw your trend line like this across those 2 touches. There's a first touch, second touch, and then you extend it beyond the second touch, so that when the market comes back to that area, you can be on the lookout for possible trades. Okay, in this scenario, since we are in an uptrend, and then the trend line that we are making an example of right here, it is a support structure. So we are basically trading along the trend, which is called trend trading. So we are basically trading along the trend, that is trend trading. So here, once the market comes back to this area for the third touch, we'll be on a lookout for the price action that you will normally look out for before you jump into a trade. So what we want to see here is we would want to see a bearish momentum loss as it is approaching the support structure, because that will be telling us that, okay, the bearish momentum is losing strength as we are approaching this support structure here, where is the area that we normally find a surplus of buyers, and that is the area where we anticipate a movement to the upside. Okay, so on our third touch, we'll be looking for entry here, and then once we get the proper price confirmation, we'll take our entry there, and we will have our stop loss below the range, and our take profit would be at the previous highest high, as that is the recent swing high that the market has reached in recent times. Then that is where we will anticipate to exit our trade. So as you can see, this is how the strategy works. Okay, so we will have our first touch, our second touch, and then on our third touch, we are going to be looking for an entry to the upside if we are on a bullish trend. And then if we are on a downtrend, we are simply going to be looking for the same thing, but then now in this case, this is just the opposite trend. Okay, so if we are still trend trading here, we are going to be looking for short or selling opportunities to the downside. And just like I said, we need a minimum of 2 touches in order for us to consider this a valid trend line. Okay, and the more the drastic the move away from the trend line is, the higher the quality of the trade is going to be. And then this would be our third touch here, where we would anticipate a short here, and then we are trading along the trend, and then this area here, which is our lowest low, that will be our take profit area. So theoretically, this is what we are going to be looking for in the actual price chart that we are going to get into right now. Okay, let's just clean this, and then now we move on to our actual price action. This is Dow Jones, as you can see here. Okay, so we can see that let's see. Okay, we can see this trend line right here. You can see this trend line that was formed, that we had okay, we can even use that area. That's our first touch, that's our second, and then this right here was or is our third touch. Okay, so we can start our trend line right there, or you can also extend it all the way to that area. It is still correct. Okay, that is still correct. And now we are going to be applying our strategy here. Okay, so let's say that we initiated our trend line right there. Okay, so that was our first touch, that is our second touch, and then this area right here, this is our third touch. This is where we were anticipating the entry from this trend line all the way to the upside, all the way to the structure. Okay, as that is our previous highest high. Okay, so now we would wait. Okay, as I said, that we wait for proper price action before we jump into the trade. Okay, let me just remove this one so you can see clearly. Okay, so as you see that we have a very huge bearish candlestick approaching this structure, which is our support structure. So that would have been our signal that, oh, okay, as much as we are anticipating a reaction on the structure because of the bearish momentum that we are receiving, we would want to wait and see as to, is the market closing below this structure, and then it will be confirming a further push to the downside, or are we closing above the structure to signify the strength of this support structure. And as you can see, the 4-hour candlestick ended up closing above this trend line right here. Okay, and then what happens next, we can see the presence of bulls as this candlestick also closed above and bullish. So we could have made use of smaller time frames in order for us to find a proper entry right here. Okay, so we could have used smaller time frames. Okay, let me just highlight our take profit, or our target being that area right there. Okay, so with this rejecting candlestick here, we would have waited up until the close of this candlestick, and then as soon as that candlestick closed, this huge bullish candlestick, we would have anticipated an entry right there. And then our stop loss would have been below that area, and then our target would have been the previous highest high, as you can see. So that is how we would have used the strategy. And as you can see, right after our entry, indeed the market pushed to the upside all the way to this area right here, as you can see. So that is how we would have capitalized on it. And always remember that as much as we have our take profit and our stop loss, okay, our stop loss is there to guide us in terms of risk management, as to we do not want to lose more than this amount. And then our take profit, it's just the area that we anticipate that the market is going to push up until. You don't necessarily have to hold trades up until that area is hit. once you are at a certain it's a certain profit, close some trades and then leave one run so that you can hold it the up until your anticipated take profit. But do make sure that you close some trade as the market pushes in your direction. Okay, and then that was the dead touch, and then again this market it returns back to this area, as you can see right here. So now this is our fourth touch, and then on our fourth touch we see this market respecting this area right here again. So also we could have found our entry right here. This area would have been our entry, and then we would have put our stop loss just below the range like this, as you can see. And then this is our current highest high in recent times. So that would have been our take profit one. And as you can see right here, right after the market reacted to this support structure, that is our trend line, we had it instantly pushing in our favor. That is currently halfway towards the take profit area right there. Okay, so that was the application of this strategy on an index which is your Dow Jones. And now we are going to be using the stock that is Tesla in order for me to explain the strategy and show you guys that it works across all instruments. Okay, we're going to switch to 4 hours. Okay, so we are going to switch to 4 hours right here, as you can see. Let's start on a daily time frame. Okay, so on a daily time frame, we're just going to focus on the recent times. Okay, and on the recent times, this is our support structure, then there is our resistance structure, and we know that the market moves in between structures. As you can see, it is previously coming from the resistance and it dropped all the way to the support structure, and then now we are anticipating it to move up until that resistance structure. And what I always say is, we capitalize on how, based on how is the market getting to the next structure. So now we are pushing from support, and then here we have this pattern that is currently occurring here. Then we switch to our 4-hour time frame to get a proper insight into this market right here and proper price action. So let's draw our trend lines. We can see here that, okay, we have that resistance level right there, and our market is currently in a bullish trend. Okay, so we'll be looking for buying opportunities, and then this right here was our support structure. Okay, so as you can see, this was the first touch, the second touch, and then we would have been on the lookout for the dead touch which occurred here. Okay, and then this goes to show that this strategy works across all instruments. As you can see that it is also playing out on the what you call, on the stock as well. Okay, so once it got here, we would have waited for proper price action. As you can see, we had this reaction, and then as soon as this bullish candlestick closed, that was engulfing the previous candlestick. As you can see, this is the bullish candlestick that I'm talking about, that was engulfing the entire previous bearish candlestick. That would have been our confirmation for entry, and then as soon as it closed, we would have entered our long position or our buy position, and our stop loss just below the range, and then our target was going to be this area right there. That is our previous highest high, or the recent highest high. Okay, then that is where our take profits would have been. Then our take profits, our first take profit in this case, would have been on this trend line right here. And then that would have been our overall take profit right there. And then as you can see, we are about 80 to 90% towards the take profit that we would have anticipated based on how I explain the strategy and how you use the strategy. And always remember to use all your time frame confluence as well. And if you would like me to make a video that is going to fully break down time frame confluence from the top to the smallest time frame, make sure that you comment below and I will definitely make that video for you guys. Okay, so as you can see here as well, this is how we would have utilized this strategy in order for us to catch this movement right here. And we barely have drawdowns when we are using this strategy right here. Okay, so that was our analysis on the stock, which is Tesla, and that is how you could have found your entry point on Tesla. Okay, and then now we are going to be looking into a currency. Okay, and here I'm going to be using a pair that we are currently on a trade, a pair that we are currently in a trade on. Okay, as you can see, this is USD JPY. Okay, we are currently inside a buy trade right here, and then this area right here is our first take profit, and based on the higher time frame, that is our overall take profit, as I'm anticipating this market to reach this area, just like I explained on the previous video before we look for a short. Okay, so I am not going to be removing my analysis on this pair, as I also provided the analysis of this in the previous video. But as you can see here, this was our first touch, our second touch, and then this area is being our third touch. And as you can see, okay, let me also highlight from the bottom, this was our first touch, second touch, then our third touch, and you can see how the third touch of the trend lines are playing out. Okay, the first and the second. Okay, and then in recent times, as you can see there, that the dead touch, it also provided that push to the downside from that structure right there. Okay, then if we are looking at it from this support structure as well, as the strategy works in both ways, either as a resistance or a support. You can see here that the move from this dead touch was very significant. Okay, but we want to focus on the current trade that we are in. Okay, so you have seen our analysis on higher time frames, and then this, okay, we are on our 2-hour time frame. Then let's switch to a smaller time frame so that I can explain properly how we got into this trade using the same strategy that I explained to you guys. Okay, so you can see this was our first touch, this is our second touch, and this right here is currently our third touch of this trend line, as my bias is very bullish for this pair up until we get to that area where I'm anticipating a short on. My bias is still bullish for now. As you can see that we had a reaction of this trend line. As you can see, we were having bearish momentum, but when we got here, we started rejecting this area, as you can see from this candlestick right here, rejecting this area, and we close above the structure. Then we didn't catch the trade on time. A solid and proper entry would have been an entry right here at this point, but you cannot always catch entries on time. Okay, so this would have been a proper entry, and this would have put us in deep profit by now. And then this area right here is our anticipated first take profits, and then the major resistance is our anticipated overall take profit. But then we missed the entry right there, and then we decided to take the entry here as soon as this candlestick closed, and then we entered there our stop loss below this area right here, though we have a bigger stop loss right now, but this trade is still very valid based on this strategy. So we are going to be holding it, and then our take profit, our first take profit will be here, and then we'll be leaving maybe one runner to target the overall take profit that is right there. And I will be definitely providing follow-up updates at the end of the week as to how did it go. So just like how I explained, you simply look for a minimum of 2 touches, just like here. This is your first touch, and then your second touch, and then on the third touch of your trend line, you jump on into the trade, especially if you are trading along the trend of the market. So that is how you use this trend line strategy to make sure that you capitalize and catch the most amount of pips using this strategy. And this strategy applies to trend trading. If you'd like me to make another video on how you can use trend lines to counter trend trade, then make sure that you comment below. I will definitely make a video for you guys. With that being said, I'll see you all on another video.